Hey everyone, welcome to the video. I'll start with my normal disclaimers and get right into things here. This is not financial advice. You're responsible for your own trades. Everything I'm about to say is just my opinion on the market, and no cats were harmed in the making of this video. All right, so we'll go ahead and just start by taking a look here at Bitcoin. I do want to point out a couple things here that I'm seeing, and there's a few things that everybody's talking about, right? Everybody's talking about Bitcoin when we were at 6,000. So what I want to do is I want to go back over here and take a look at this from a higher time frame. I'm going to actually get rid of some of this stuff here that's cluttering up the charts. All right, I'm going to keep my counts that I've got over there and show you that. But what I want to focus on here is what we have in this zone right about here, starting from there, moving ourselves all the way back down to about here. So this area is or was the support of Bitcoin during the bear market. We had a decent amount of consolidation in this zone. Finally, we tapped what I'm going to call the liquidity pool. We tapped this. We came all the way down here, as you can see, to about 5,500, and we basically shot straight up to 20,000 from there. It was basically a slingshot. You pulled back the slingshot, and then it went straight up. It went from 5,500 all the way up to 20,000, or it went up approximately 400% from that point. So from down here, and we moved all the way up to about 20,000. Sorry, I guess that's about 300%, about 4x or 300%. All right, so and then we eventually topped off there. We had our blow off top, and then we started to move down, and then we continually tapped this area, which we eventually smashed right through. I'm still remembering the moment down here where we were we broke down through this. And I think there were a lot of people that were looking at this because of the fact that we had this area over here. I'll go ahead and highlight this here. Basically, we had our resistance that we finally broke through, right? Then reclaimed that as support. And then when we came down here, we were looking at this as support yet again. But after you've been consolidating for so long in this zone, and we all have seen this, and so I'm not showing you anything that you don't already know, but we had that descending resistance line that was moving its way, inching its way lower and lower and lower when we do that in comparison to this area right here, which we eventually broke down inside of. And so the interesting thing about that is if we take a look at this, we're kind of falling into a very similar pattern. So I know I've got a lot of other garbage over there that's kind of cluttering things up. So let me go to a different chart and just kind of illustrate this just a little bit. I'll go ahead and go to my Coinbase chart here. And again, looking at the day time frame, let's just take a look and see what this actually looks like. And like most things, I'm kind of, coming up with this as we go. I do a lot of my analysis here kind of in real time. So let me just thin this out just a little bit and see where this is going to land us. So right down here, we're looking at, again, I've been talking about this for at this point it feels like months, but I know it's only been a week or two. This comes down to about 7,300, 7,500, and I would expect there to be a tap down here into this liquidity before we start to move back up. And so again, what I'm seeing here, looking at a three-wave correction, so we basically from here we have an A, B, C, and then an A, B, C, so that'd be a 3, 3, and then we're looking at a 1, 2, 3, 4, going down for our 5 down here. So that would be our fifth wave taking us down to this. And again, I'm being very rough and creating some estimates based on this. So we've got a 1, 2, and then we've got 3, 4, and then we're going to go down for the 5 right there. So very similar to that is sort of what I'm expecting to see, although I will say that we're still looking okay to come up to about this zone right here, which has about 95.50 or so, and actually probably is going to be a little bit less than that. Yeah. So let me just pull this down a bit. Probably looking more like this area right here between 93.50 and 9,500. Very possible for us to do that because looking at a 5-wave structure on the way down, we probably will extend out the time a little bit here, but there's 7,400. So we're still kind of looking for this to be completed. Maybe this is an ABC, maybe this is a WXY, it's a correction, right? It's a correction based on this first wave down and this next wave up, right? So again, we can do the measurements based off of this, and we can just kind of see where some of this is going to be landing. So if we start here at the top, we work our way down here, and then this zone right here where we rejected, again, we've talked about this, is right here at the 618 to the 65, and then our target, which was 79.38, which we have hit. We have hit this target. We've actually hit it multiple times. Now again, going back here to 6,000 in this area, which was our support over and over and over and over and over and over and over again, eventually it's going to break through. But there is a difference from this formation, right, where we broke through, compared to what we are currently seeing down here in this zone right here. One could say that this looks very similar. One could say this does look very similar on a much shorter time frame, right? So more than likely this is going to take some time to resolve, as did this. Took lots of time. It took lots of time for this to resolve. But the main difference here is in this zone where we keep touching over and over and over, we're not doing this. We're doing this. We're actually expanding. We're broadening this. And usually when something like this happens, really it tends to look a little bit like this. But when you're broadening like this, what tends to happen, we usually have 5 waves here. So it's supposed to look a little bit like this. So we've got this 1, 2, then 3, and then 4, and then 5. And then when you come down here, this is typically where things reverse, right? So this is a potential reversal, and then again this would get us down here. So a lot of people are talking about there being another pump in the way or in the future, which is very likely to happen in my opinion. I think that the daily close yesterday was not very convincing. The daily candle right now is not looking too good. We did get a good reaction off of the 7,800 level. I think at least on this exchange it went to 78.14, but I believe on BitMEX, I believe we went down to about 77.99, 77.99.50 on this. So if you're looking at a really small time frame, we went down into this liquidity pool. We did not close even on a 15-minute time frame. I would bet that on the 5-minute, on the 5-minute we found decent support there. We wicked down and we've been sort of consolidating here. I'm not sure that I would call this an impulsive move yet. It's not really convincing, but if we're able to get back above 8,000, then I think that is something a little more convincing that we are going to continue to move upward and onward. We talked a little bit about trading ranges. When we had this dump down here, again, I'm looking at the 5-minute time frame. This is our area, right, where we're basically looking at finding support or resistance. So this is really sort of a no trade zone for me. So I'll just mark that off in yellow because we had a high right here, which we found resistance, a little bit of resistance, but we were sort of forming a little bit of an ascending trend line right here, which we finally did break through, and then we found support broke through, and we're still trying to find support in this area. And again, we've got this same trend line that's starting to form here just a little bit. Make some adjustments to that, but nonetheless, we're trying to work our way up. This is going to be an area that we need to break above. I still do believe we're going to go down and hit 7,500. I do believe that, but especially if you're using leverage trades, very easy for you to get completely annihilated when you're trying to short the market, especially down here below 8,000, because it could be very easy for us to go straight down here to 7,500, which is going to be all the way down here, right? So even if you were to short from right here and you're looking for this move to 7,500, let's say you set the order at 7,502, that's a 5.37% drop. But if we move up, it's going to be very easy for you to get liquidated by being, what's commonly referred to as a bottom shorter. You don't want to short the bottom without a plan to get out of your trade. So if you're looking to short here, which I'm not sure that I completely recommend doing that right now, not that this is financial advice or anything, but I would be looking to, I'd be looking to get out of that short position somewhere between 8,050 and maybe 8,100 or so. In this range, I'd be looking to get out of that short because, you're now tapping into these areas which were support, and then you're going to be hitting that as resistance. And if we have a rally that gets us all the way back above 8,000, chances are pretty good we're going to be going a little bit higher. Okay, so let's go ahead and take a look at Ripple here. So Ripple, I was talking about this. I'm going to go back to, say, a 2-hour chart here to show this to you. We've been talking about this again for quite some time. So the trade that I shared with all of the, and I'm not going to call them members in the Discord because I share these with everybody. I shared this that be looking to open up more spot positions in this area, and again, this was down here at about 26.5 cents. We're still at about 29 cents, and even though Bitcoin did have a move down, Ripple wasn't so affected as some of the other assets were. So I'm still definitely looking this zone here as our support, starting from this candle closure here all the way up to that wick up there. This is proving to be really, really good support for Ripple. So I'm going to go ahead and highlight that guy with green, and then I'm going to be looking to yes, no, that's still looking pretty good. I would say if we close a daily below this 28-cent mark, if we close a daily below 28 cents, I would say that it's probably starting to be time to get out of those positions. If you've been on the server for any amount of time, you know that I was talking about buying Ripple down here at 24 cents and then talking about reaccumulating or adding more to your spot positions at about 26.5 cents for an average entry of about 25 and a quarter or so. So still looking to be in decent profit here, and I'll just continue to be monitoring this, especially this yellow trend line, which we talked about in a few videos ago. This is an area where we will be looking at as well for closing out of any long or spot positions that may be opened. Anything could really happen, but right now we're still trading above that, and even with the dump on Bitcoin, we were still found support there at 28.5 cents or so, and we're still consolidating above it. So I would say as long as we're still consolidating above this, we're still looking at 43 cents. So conservative target that I threw out to the people on the Discord was about 32.5 cents or so, but definitely going to a higher time frame. So if I go to like a 4-hour time frame, still going to be looking all the way up here at about 43 cents, which is this is the 618 of a different structure, but if I move this down a little bit, which, just to illustrate this, we had this move down, we had the algo target here at 22.72 cents, which we hit, we had a good reaction, which is why I was starting to recommend buying at 24 cents. But nonetheless, if we take this entire structure that we have here, move it all the way down here to the bottom, again, we're looking at the 618 of this structure being at about 40 cents. If I threw the 65% on this as well, let me just throw this on here, looking at 65%, we would be looking at at about 41 cents. So maybe 43 won't hit, but this area does look pretty good, especially because of this trading range that we had there. So this is again where I would be looking for more resistance, and this would be looking for not necessarily where I would be selling Ripple and walking away, but it would be looking for I would be selling my long-term position and then looking to reaccumulate it a little further down, maybe 10 cents lower, 30 to 32 cents after selling at 40 or 42 cents. That would be a decent amount of accumulation. You're looking at about a 25% increase in your assets. If you sell at 42 cents, then you buy back at 30 to 32 cents, you're looking at a 25% loss in Ripple versus US dollar, but at the same time, you're looking, if you sold at 40 to 42 cents and buying back at 30 cents, you're still looking at a 25% increase in your holdings in Ripple. So that is something to consider. And maybe if you had, say, maybe you bought at 24 cents, and then let's say you put in $700 at 24 cents, and then you sell at 43 cents for about $1,300 or $1,400. When it comes back down to 30 cents, maybe you only want to put that 700 back in, and maybe you want to keep the rest on the side, which is something I highly suggest doing. Not that this is financial advice, of course. I have to continue throwing that disclaimer out there. But if you buy at $700 and you sell for $1,400, and then you buy back on a 25% markdown in price, I don't suggest taking all $1,500 and putting it back in. I would suggest putting in just what you originally had invested and taking whatever profit that you had and either cashing it out or putting it in something else. Too many times I hear people, buying the dips, selling the top, and then accumulating, and I use accumulating in air quotes. So they're accumulating, but at the same time, what ends up happening is the price just continues to go down, right? So first off, you need to have a trading strategy. I'll do my best to put out these videos every day or so to discuss what these strategies could be. But at the end of the day, you need to know when to get out of that trade. So selling it at 40 cents and then trying to reaccumulate down here, it sounds well and good. But if we start to break this low down here at 28 cents, after we move up here to 42 cents, I would say even if you bought at 30 cents and you're at 28 cents, that's a 2-cent loss. Not a real big deal, but I'd be looking to get out. Get out and wait for a further dip and a reaction that looks, you're going to be looking for a reaction that's going to look something like this. This is on a 4-hour time frame. You're going to look for very long wicks, right? So this is a candle body. This is the candle wick. The candle body is about half the size of this candle wick. That is a good reaction, in my opinion. This right here, this is another really great example. This is our candle body right here, and this is our candle wick. And let me zoom in on this just a little bit more just to kind of show you what I'm talking about when I say a good reaction, because this is a really good reaction right here. This candle that we're looking at right here, this has a candle body of an 8% loss. But look at the wick, right? So if you, and not that I'm condoning trying to catch falling knives, but if you did have a buy down here at 21.5 cents or 21.75 cents, and this candle closed at 24 cents, well, then you're quickly looking at a 20% gain on that. Even though it was an 8% loss, it was a 20% gain or so. Actually, I think my math is off on that. Let me just catch that. So yeah, it's 11%. 11% gain if you were to catch the bottom of this. But that reaction is exactly what we're looking for, right? So you're looking for those long wicks. And, by the way, the same thing is true in the opposite end of the spectrum. If you're looking at a 4-hour candle where you have a humongous wick on the top, that's a good rejection, right? If you see that on the top side of things, that's a good indication that you should probably be getting out of that trade. This is a good example here where we hit the top at 51 cents, right? Bullish candle, right? But no, actually it wasn't, because even though this candle was up 5.2%, from the top it was down 6.8%. So it was down quite a bit from from where the top was, even though it was up quite a bit from where it opened. So this is a bearish candle to me. This would have told me, okay, well, now I know that the bears are going to continue to take control of this. The bears are going to try and take profit here. So they're going to continue taking this price consolidation to get out. And then finally, when they're satisfied with what they were able to remove from the market, getting profit out of retail traders, that's when they start to go after each other. That's when you see these huge price markdowns. So you're going to see them biting a little bit by little bit, taking their profit. Then eventually they're going to look for that last move up, and then they're going to say, okay, well, we're done, and now we're just going to dump everything. Then you start to see the accumulation down here. So it's a big game of whales versus whales and trying to catch trying to catch the retail traders, right? And I would say that they do a very decent job of that. I would say, for all intents and purposes, this is a scam market, where most of these assets are based on nothing but thin air. It's all speculation and it's news driven. So you need to be very careful with these things. But nonetheless, um, you do have to recognize divergence. You have to see momentum. I don't talk too much about those types of things on these videos because I do try and cater to a more novice crowd. So try to focus more on trend lines. Focus on trend lines, focus on channels, and basically making directional plays and knowing where these stop losses are. We take a look at these liquidity pools, and this gives us an idea where we need to get out of the trade. Back here at 24 cents, I would be looking to get out of the trade if we were to basically close a 4-hour candle down here below 22.78 cents or 23 cents. If we get down there, that would have been a good indication that my 24-cent buy was bad. And that's okay because people are wrong all the time. I am wrong, and I'm happy to admit it. I'm not right all the time. No trader is right all the time. But at any rate, this is what I'm looking at for Ripple. Still in my spot long position. I'm not in a leverage long position on Ripple. I'm using, I'm using funds to have just spot buys, and it's actually held off an exchange. I don't even have those funds on exchange. If we do start to see a spike up above 30 cents and we can hold above 30 cents, that may be when I'm starting to maybe move the funds back into an exchange. I'm just trying to prevent myself from having any what's the word I'm looking for? It's not greed. I don't want to have any temptation to trade my long-term holding. I do have Ripple that I do flip on the exchanges, but I also have the 24-cent buys that I offloaded off the exchanges and I'm holding on my ledger, and I'll move it back when I feel that the price has moved up a bit, and it's looking that it's getting close to a good place for me to get out of the position. So I have my long term, it's off on the side. I do trade with Ripple on the exchanges just a little bit. My holdings that I have off the exchange are much larger than what I'm using to flip inside of Ripple, but nonetheless, these are the things that I pay attention to. Thanks, Todd. I just saw your note. I appreciate that. Look for support resistance lines. You're going to be wanting to look for probably a 2, 3, or 4-hour candle. If you don't pay for TradingView, you can get the 4-hour candles, no problem. You can get the 1-hour candles, but I wouldn't look at 1-hour candles for support and resistance lines. I would look at a 4-hour candle. That's where I tend to find these levels. So you're going to be looking for candle closures. Ignore your ignore your wicks on those, and that's the whole point here. So just find those, and this is going to be what gives you your areas that you're going to be looking to enter your trades, exit your trades, and also where you're looking to stop. So you want to catch a trade as close to one of these support and resistance lines as possible, and you're going to want to be stopping or exiting that trade if it starts to get close, or especially if it penetrates some of these support and resistance lines. So as a trader, I use Fibonacci. I look at market geometry. I look for structures like wedges and trend lines and channels and things like that. So I do tend to look at these. And right now, in my opinion, I could throw a channel on Ripple right now. It probably would look pretty darn good. So if I take a channel and I take this wick down here, work my way up here, and then start to look, even if I take myself all the way up here, this is looking to be a decent area for Ripple. So maybe not quite that, but this is looking fairly decent for Ripple, again, on a 4-hour time frame. We've been sort of finding support here at the median. We're finding resistance now here at the median. But if we can get above this median, then I would say that we're pretty clear that we're going to go up to at least 31 to 32 cents and kind of go from there. But nonetheless, of course, if you have any questions, anything at all, I'd be more than happy to answer any of those for you. If you don't have access to Discord, just ask, and I can get you an invite to it. And I'll be there all the time. So hopefully you all have a good day. Tried to keep this short even though it was about 25 minutes, so apologize for it being a little too long. Yeah, if you have anything, let me know. And if you want me to look at anything in particular, feel free to let me know. I've been looking at Ripple, I've been looking at Bitcoin, and I did a video on Ethereum a couple days ago. And in the server, we do talk about holochain and some other things as well. But yeah, if you have anything you want me to look at, let me know. Throw a comment out, like, subscribe, share, all that good stuff. Let your friends know, and I will catch you all later.